finished an up week on a down note. Not that big a decline, but the markets were all down today. Although we did see record highs made this week. And in fact, the S&P 500 made another all-time record high today before closing negative. I got the numbers. The Dow was up 2.3% on the week, so it was actually the best gainer. S&P up 2%. NASDAQ 1 3/4. The big tech stocks leading the way. You got a big, boost from the tech world with that $500 billion joint venture announcement. A lot of people talk about the $500 billion spend, and maybe in the long run, this is going to be a good investment. We'll see. I mean, maybe AI has, all the promise and will live up to the hype. I mean, maybe it's even underhyped. But what I do know is that in the short run, there is a big expense to the world investing $500 billion. And of course, that's not all the investment. There's more. But if we're going to invest this money, it's got to come from someplace. And that means that other investments that might have been made that may have had a shorter payback, they're not going to get made. Everybody wants to talk about, how, if we invest money, it stimulates the economy. If we build a bridge, it's going to stimulate the economy. The building of the bridge doesn't stimulate the economy. In the short run, it actually sedates the economy because resources to build that bridge need to be diverted from something else. We need to pay for it. Now, it helps the economy over the long run if the bridge makes us more productive. Let's say it reduces the time it takes to get goods from point A to point B, or to get people from point A to point B. And because we made that investment, it pays off in the long run. But doing the work to make the investment, right, we got to cover that burden in the short run. And then the payoff comes down the road. Well, it's going to happen on a bigger scale with AI. If we've got to build out all this AI infrastructure, data centers, all the computers, whatever, the money to do that in the short run, even if it has huge returns in the long run, in the short run, it's got to come at the expense of something else that's not going to get financed because the resources were diverted. We don't have an infinite supply of resources. Now, maybe AI is going to solve that problem. I don't know. But right now, our resources are limited. The capital is limited. And, we're wasting a lot of that scarce capital on crypto, on meme coins. I mean, think about all the money that is being blown. I'll get into that a little bit later. But that's money that's not available to make productive investments. So we're squandering that. We're wasting a lot of energy creating nothing. But now we need a lot more energy to create something with respect to AI. But I'll get into that. But anyway, that's what was powering the NASDAQ. But I think the big story on the week was the U.S. dollar, gold. Nobody's really talking about that. The dollar index was down for the second week in a row. And this week was a big drop, about 2% drop in the dollar index. Now, it's still pretty high in the scheme of where it was before Trump was elected. We're about 107.5, but we got above 110 last week. So we're about 2.5% below the high. The euro is back at like 105 after being, I think, slightly below 102 when it hit the low. But we'll see what happens next week. I think if we get another drop next week in the dollar, I'll be pretty confident that we've seen the highs. And this whole move up in the dollar was a gigantic head fake just to get all the traders positioned the other way before they get the rug pulled out from under them. And that's what I've been expecting. Also, gold. Gold today, after hitting record highs just about every day this week in terms of the euro or the pound or the Canadian or Aussie dollars and a lot of other currencies, gold was going up. And it came to within $10 today, maybe even $7 or $8 of an all-time record high. We got up to just about 2,790-ish. And that's about the record high, maybe 2791, 2792. So we almost got there. And in fact, gold closed today at 2771, or for the week. That's about $20, less than 1% below its all-time record high, up 2.3% on the week. So about the same percentage as the Dow. But again, record highs in other currencies. Silver was up 1.4% on the week, not as much as gold. And it's still below $31. I think it closed around $30.60. That's the buy. I mean, you could certainly keep buying gold. It's going to go higher, I think. But if you don't want to buy at the all-time highs, which is basically where we are in gold, now the chances are these aren't going to be the all-time highs for long. And so most people who buy gold are going to be buying near the record highs because gold's going to keep rising. But again, it's not gold that's rising. It's fiat currencies that are falling, and they've got a long way to fall. So therefore, the price of gold in terms of those currencies has a long way to rise. But silver is what everybody should be buying right now, I think. I mean, it's a steal below $31. I mean, I think 30 is a support. I mean, it can get a little bit below that, and we've done that. 29 and change. But I mean, this is, I think, about as good as it's going to get in the silver market. People should be buying it. Remember, Schiff Gold sells silver too, and they'll be open all weekend. You can go to schiffgold.com and load up your shopping cart with a bunch of silver or talk to the reps there. But, the market's going to explode, I think. I mean, I think we're getting ready for it. Nobody's talking about it. Nobody's paying attention to it. But the fundamentals are great. Certainly, the gold stock investors are not paying attention to it, even though the gold stocks had a good week. Finally, the GDX was up 4.4% on the week, and the GDXJ was up 4.75%. So a solid week. But if you consider where they are, this morning, these stocks needed to rally 18% to get back to their highs from October. That's like 3 months ago. And even with today's rally, there's still, 16 and a half, 17% rise from here to get back to where they were when gold was the same price as it is right now. I mean, gold is in a huge bull market, obviously. We're hitting record highs in every currency. We're about to hit a record high. I'm pretty sure that we'll hit a new all-time record high next week, if not on Sunday night. So record highs in gold, that is a bull market, right? Bull markets keep making record highs. The gold stocks are all in bear markets, right? They all dropped more than 20% from their highs, and they haven't recovered. So they're still in bear markets. So you have gold at all-time highs in a huge bull market, yet you have the gold mining stocks that should be the primary beneficiaries of the gold bull market, and they're all in bear markets. What does that tell you? Right? Investors have got everything wrong, right? They're buying what they should be selling, and they're selling what they should be buying. They don't understand this gold rally. And in fact, because the dollar has gone up over the last 3 months, even with the recent decline, that means these mining companies are even more profitable because the increase in the price of gold is bigger because the gold companies operate in Canada, right? They operate in Australia. Their operating profits have really gone up because their costs are in Canadian dollars, right? But their revenue is in US dollars. So they're more profitable and the prices are lower, right? So this is, I think, going to end up being the biggest bull market that we've ever seen in gold, probably bigger than what we saw in the 70s, which is, a tough act to follow. If you recall the 1970s, when gold went from $35 an ounce to $800. So I'm talking about something that potentially is going to be bigger than that. But the biggest bull market in history, accompanied by the most skepticism, the most bearishness. There is no greed. Gold's at a new high, and gold stock investors are scared to buy the stocks, right? Every time gold goes up, they think it just means it's about to get killed. And so that, I think, is a very good sign for the longevity of this market. But it also just shows you how few investors really understand what's going on here. I was looking at some of these statistics just on the U.S. market and where it is. So the S&P or U.S. stocks represent 67% of the total world stock market. Think about that. We're one country. We got 4% of the population. And our stock market is 67% of the value of all the stock markets. Now, that might be justified if we were that productive, but we're not. I mean, we're productive, but not on that scale. So world GDP, we're only 26%. Now, I say only, that's still a lot. We're 26% of world GDP, but our stocks are 67% of global stock market cap. That is a bubble. That doesn't make sense. Now, if you drill down into the GDP numbers, if you look at manufacturing, which I think is the most important part of GDP, because a lot of the services are a bunch of fluff and government and stuff like that, we're 16% of the world's manufacturing. Now, that's still a lot. We're 4% of the people, and we manufacture 16% of the stuff. But that doesn't mean our stock market should be 67% of the global stock market. But even though we, produce 16% of the world's stuff, we only export 8% of the world's exports.